wouldn't mind to take out these lows, but I mean, I don't know if it's going to happen immediately, just simply because you've got this value area low in the 618 here, and also this previous range value area low too will offer some kind of support in the price action. Is there a, oh yeah, we're underneath the daily level there. If I had the funds, I would buy 1 million of this token as low as possible. I really would. So I'm hoping it goes down to about what, 10 cents. That's $100,000. Can you imagine? I'd buy it on spot though. I wouldn't leverage, because it's quite hard to leverage a high amount of token. Yeah, I can't see any strength right now, so we just have to be patient. And I think David's right. He's looking for 5-minute market structure change. I trade on socials and events, learning TA as I go. Well, yeah, TA just start. I mean, it takes time, but it's not that difficult. The hardest part of TA is confidence in the analysis. That takes time because that takes experience. Once you see things happen and see how things react to certain things, that gives you confidence for the future. Yeah, so the reason why I know, like, for example, fib lines are so important is because I've seen so many times how fib lines, how the price reacts to fibs, for example. Yeah, you go and tell someone who has no idea about fibs the why, they won't believe you, or they won't necessarily trust you, or they won't accept that. So they have to experience, it's like an experience that you have to experience for yourself to fully trust in your own analysis. And that's really that takes a little bit of time, but you just learn these ideas one by one. It won't take too long before you become competent and proficient. And we're all learning, you know, like that's the other thing. Just because I know a few things doesn't mean I'm not able to learn more things as time goes by. It's like there's tools here that I have no idea about. I've messed about with them. I still don't know how to use them. Fib circles, fib spiral. I don't know any of these. I've tried to use them, but I couldn't figure it out. So and it's not hard to find information on all of these tools online. It's very kind of scattered. So I think fibs are probably your most important tool for sure. And also when you're charting, only do it in log. I wouldn't bother with regular unless you're using that one, the fib, this fib speed resistance fan. And then the other tool that's extremely important is this one, this volume tool. It's called the fixed range volume profile. That gives you the volume levels. Okay. These are the settings that we use, David and I use. This row size can be less. You can have like 170. I like to have a little bit more data. It's a little less laggy when you have it less. If you have more, it's a little bit more laggy. And then the value area volume is a percentage. So the default is 70. That's 70%. It just tells you the area where most of the volume was. 70% of the volume was in that area. We use 68 because we like to have a little bit slightly tighter volume. And the point of control is where most of the volume was. And then you have the 70% range with the value area low being at the bottom and the value area high being at the top. And so naturally, they're going to be your biggest volume resistance in the overall range. Once you learn about the volume, yeah, then what you can do is you can break that down. So that's the overall range, but you can kind of, like, if looking at this whole price action, you can split this up. Yeah. So you see from here, that's an upper range. And then up down to here, that's the lower range. It's like two ranges. And you can do the volume for the top range. That's the top range. This is the volume for the bottom range. See that? So now you have two volume profiles. Now we're in the bottom range. This is the actual volume profile that we're interested in. And you can see we've lost the value area low here, unfortunately. So also a sign of strength would be to get back into this lower range value area low. But obviously the other thing that you bear in mind is that the overall volume range, you can see that the value area low is here. So that kind of, there's still some support, but it's on the overall range. So that's, I mean, once you kind of mess about with volume, that's really a good place to start. Volume is a really good place to start, like messing about and seeing how the price behaves and reacts to volume. Effectively, what you need for any token is you need the price to flip the point of control into support effectively. So to go up, there's no way we're going to go up until we can flip the point of control into support. 4 point at the moment, it's about 4.1, sorry, 41.8. If we get that, you can see that it's flipped into support. You're not expecting now to lose it once you flip it. And even though it's quite high into the value area high, it's problematic actually, to be honest with you, to be there. From my experience, what I've seen, it'll be a lot more bullish to put more volume down here somewhere, probably here, because you see the volume profile. You'd probably have to put in a lot of volume down here somewhere in the future, so that the point of control actually flips to the lower part of this overall range. I think that would be the most bullish scenario of this volume profile. If that happens, then you'll be flipping the point of control in the lows of this overall range, and so therefore it'll be a lot easier to go up, yeah, because you've flipped the point of control. It's in the lows of this range, and that happens a lot. And so that's why it's always a good idea to mark out the volume. And so when you redo it on a daily basis or weekly basis or whatever basis, you can see if there's any changes to the volume. Okay, so volume is a really important tool that you should definitely use and utilize. And then the other one, obviously fibs, which you're probably familiar with. Again, fibs, I use log, and so here you see the fib retracements from the high to the low. And it's always good to check the fibs. So just check to see that the lines are being respected. You see the 50% mark, it's not a fib line, it's 50% of the range, but you can see that there's a reaction there. There's a reaction there, there's a little bit of reaction there. You can see that's being respected. You can see the 382 is being respected. You can see it's being respected. And so therefore you expect the 236 to be respected. It was here and here a little bit, and here, and then look what's happened. It's just been ignored. So that's that tells you there's real weakness there, huh? It gives you a clue, you know, because you're expecting it to be respected. It's been respected in the past. Why shouldn't it be respected again? The fact that you haven't respected it tells you that there's weakness. Yeah, when you see these are really important fib on the log scale. This is, so if you go into fib, you see that it says fib levels based on the log scale. See, look, even the 786 up there was respected. So you can see that the fibs are being respected, and therefore that helps, because if it helps to see. And so naturally it's the same thing right now. If you look at this overall fib retracement, we're into the lower part of the range. You consider all of these fib levels areas as ranges. This is the lowest range now. We're in the lowest part of the range now. This is the next level, this is the next level, etc., etc. And then the golden pocket is an area where the price can often find a support or resistance, and it starts at the 618, ends at about the 65 or the 66. And it's just good to have that. So once you have the fibs and the volume, the rest is pretty straightforward. You know, the rest you can kind of add different things. Trend lines, definitely the outer trend line is really important, which I already explained. This one, it was that one, and you see it broke, back tested, and we had a little pump, and now it's this one. Maybe that one. Maybe it's not to the wick, maybe it's to the body, to the wick. Maybe that's better, I don't know. Maybe to the... So when you kind of put all of this analysis together, and put the fans ranges back. No. Did I delete them? Let's put this all back in. So actually I've got those marked out, so I don't need to keep that. Volume levels, there they are. I'll just mark them out. And then the other thing that I've got interesting is these GAN lines. I'll put those back in. That's from the top to bottom. You can actually use other pivots, doesn't have to be the absolute low. Oops. That doesn't give me any information. Then you have this one from the low to the high there. We've literally lost all of them, to be honest with you, so it's pretty irrelevant. They're kind of both pretty irrelevant now. So I'll just ignore those, and then let's just have a look at the speed resistance fan. Now with the speed resistance fan, you have to go back to a regular chart to do it. Let's have a look at this one. Again, it's the same idea from low to high. You can see that the levels are being reacting here and here and here. And so naturally you'd be expecting some kind of reaction at the lowest one. That's that one. Let's go the other one from the top. Again, from top to the pivot here. Nothing. There's nothing interesting there. So the only interesting one is this one at the moment. We're close, sir. We're very close. It's probably going to be a good place to find support there. And then the other thing that's quite important are liquidity levels. And so to create liquidity levels, you start at the higher time frame, on the monthly time frame. Okay. So actually, let me just get all of this together. Volume levels, just pull that all up. So I actually done it already. You can see you've got this monthly level. So the way it works is that you're looking at the candles on the monthly time frame, and where the candles square off, that's your monthly level. You have to wait for the candles to close, but that becomes your monthly level. And so as long as the price doesn't trade to that level, then it's an untapped level. So it becomes a strong liquidity level for people wanting to sell. And to go up, you have to flip that level into support. You can't just go up. Okay, you start on the monthly time frame, and then on the weekly time frame, you can do your weekly levels. You see here the weekly level, you've got the same idea. You've got this green and then red. So that becomes your weekly level. We've got a weekly level at the same place that there's a monthly level there, but because they're both on the same place, you just leave the higher one because the higher one's more important. It's quite a strong level. And then you go to the daily level too. You can do exactly the same thing with the daily. Again, the same. So that monthly level is an extremely strong resistance level because you have a daily level, you have a weekly level, and a monthly level at exactly the same place. It's a really strong level that has to be flipped. So naturally, if the price goes up to 63 cents or so, it'll be a good place to sell or to take profit. And then you've got the same idea. You've got this daily level up here. Now, the reason why you wouldn't necessarily put that level, you might, but you don't, is because you see how the price has gone up into the level once and been rejected. And so that becomes a tapped level. And so therefore, you're not really interested in levels which are already traded through because it means that the liquidity has already been taken from that level. Okay. And so you see that a lot as well when you get levels which are traded through. Like for example here, you see that here, when you form that green and red, you had a daily level, and you see how the price went up. It traded through that level and came down, so that's no longer relevant. Okay, well there's one here. This one is traded through. You see here, this one's traded through. Price came up and sold into it, so it's no longer relevant. But we have got another one down here. See that? And then the one that we're into now is here. That should be support. But the price is obviously pushed through it. Wait for the daily time frame to close. Yeah, so sometimes the price will trade through them and then it just closes right back up, because that is actually, it's a daily level. So you're just waiting for the daily time frame to do what it wants to do, you know. So like for example, if you see here, the price traded in this candle, the price traded all the way through down here, and look, it closed right back above. It's not strong, but it did give people who entered at the daily level a chance to exit at break even before the price crashed. So it's just something to bear in mind. And then obviously you have one here, see the red and the green, that's an untapped daily level there. So those are your higher time frame levels, with the strongest being right up there, because that's 3 levels in one. And then when you're doing your analysis, you've got all of these like liquidity levels. You've got your volume levels. Okay. Now I've got HVN is a high volume node, and then I've got the HTX value area. I'm probably going to get rid of that now. Actually, not bothered with HTX. And so let me just have a look at this one more time. Yeah, you see it's not that high anymore, is it? There's a little bit of a high volume node there. Not really, actually. Look at the volume here. There's a little bit of a high volume node there. So then what you would do is you'd get all of your stuff out, all of your analysis, just chuck it up. And it gives you an idea of where most of the resistance and support is in terms of levels. Let me get that trend line in. I'm not going to put the fan in yet. Probably what I would be thinking of doing also is putting the 2 ranges, because I think that's quite important. So let me just do that now as well. So that's your first range. This is your second range. If I can get that. Oh my god, it's taking time to load. Okay. All right. And lots of lines. But the thing is, the price has to get above every single line. Yeah, there's no way the price is just going to get through any of these lines. There's no way the price is going to do that. The only time the price is going to do that is where there's no lines, where there's no liquidity levels, there's no nodes. volume nodes, nothing. It's in price discovery. Once you get above there, flip that into support. No volume, no data, nothing. It's just literally up, 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 up. That's what we're waiting for an expansion to the upside. And until then, there's a lot of things going on here. The price has to find support somewhere, bottom out somewhere. That's going to correlate with Bitcoin, obviously. You've got this outer trend line where it needs to break, and then wherever it breaks, if it's down here or up here or here or wherever, it doesn't really matter. But effectively what the price will need to do is break that line and then find support. And usually these horizontal supports are the best ones, not the trend line itself. Sometimes you can get confluence with the trend line and the horizontal. Let's say we were to break today or tomorrow like that, and the price comes right back down into this 236, which corresponds with the trend line. That could be good because you have a horizontal, but then you have the back test of the trend line. But ideally you want a horizontal test, not trend line isn't so important. You don't necessarily need to test the trend line. You break that, you have a little back test, and you change market structure, which is a higher high, and effectively you should be then looking for higher prices. You still have to clear these levels of resistance, and so naturally you see here you've got a really big area of resistance. You've got the point of control, you've got a weekly level, and you've got the 382 fib retracement. It's pretty stronger, right in the same area. So you wouldn't expect the price to just walk through that level. You'd expect some kind of reaction, and you'd be looking for a reaction. And again, you have the same idea higher up. So up here you've got that really strong monthly level. It almost corresponds with this value area high. It's quite close to each other. You'd be looking for a reaction there. And honestly, just looking at the chart, I would also be looking for a reaction at the 50% level. You can see that it's acting as some sort of SR flip here. Okay, and so the good thing about what I'm looking at now is there are gaps. You see there's lots of black gaps, and that's probably where the prices will move the quickest. So if we do end up getting above there, you'll probably go up to there really quickly. You'll be quite impulsive where you see the gaps. Okay, and so it just helps to see how the price moves. And so when I'm imagining price action, all I'm really doing is just marking off all of the liquidity levels, the higher time frame support and resistance levels, and just trying to see how the price is going to move in and between and around those areas of interest. That's all it is, and it's all speculative. And then I'm taking patterns into consideration. So I've got an eye on patterns as well. So below 20 was exactly, absolutely right. So Gary is saying it's below 21 cents price discovery reverse. Absolutely. So if we, for whatever reason, can't predict it, Bitcoin would have to really go down to 44k. If Bitcoin starts breaking down, this is going to break down for sure, 100%. Every whale will sell. They won't allow their portfolio to go into negative. They'll short to cover their position. That'll probably be the easiest thing to do for most whales, just to short their whole stack, and then they don't have to worry about losing value, and they just wait for the price to bottom out, and then they'll just close their short, and then they haven't lost value. They haven't lost fiat value. I know that there was a lot of whales who entered here because I was looking at the Telegram group. I saw a lot of whales enter there. I also saw a lot of whales enter here. So already some whales are under pressure. Okay, and I don't know if it's the same whales. But if for some reason we start seeing a continued breakdown on Bitcoin and we can't hold levels, and really making a lower low here is confirmation of bearish market structure, because you've put a higher high here, you put in a lower low here, that higher high becomes a lower high, and now you've just put in a lower low after you've put in this lower low. This is bearish. This is bearish. This is a lower low, lower high, lower low. This is bearish. Even if you get a pullback, you're going to get some kind of lower high for continuation. Yeah, you're going to get a sell-off. Yeah, and then you're in price discovery to the downside. No one can really predict how far it will go, but I can give you a clue if you want. And it's only a clue, like no one really knows how far it could go. What you do is you do some kind of, there's two things you can do. Let me just group these together. You can do a fib extension. Okay, so you do it from the pivot here to the low here, and then you just do, I do it on log, so I do a full extend. Oops, oh god, that's the wrong way, sorry, my bad. Apologies. You have to do it from this pivot to the high there, from this pivot to this high. And you've got some targets. And so an extended push down would be all the way down to the 1.618 on this move here. That would be the extension. See that? And you'd start to find support at the 1.272, somewhere between the 1.272 and the 1.414. That's kind of where you would first start to find support. But you know, even if you were to go down there, it could also break through and just go lower. That's kind of pretty extended. And the 1 to 2 would be extremely extended. It'd be like a nuke or something. It'd be like worst case scenario. But those are like areas of interest if you're looking to just trying to catch a falling knife. That's where you would do it, literally. Or if you're trying to close a short, you do it at those levels. So that's from there to there. Let me think, what else could you do? Like if you could, I mean, look, so from that pivot there to that top there, you see, look, I'm just showing you so you see that it does work. So I'm just taking it from this pivot here to that top there, and you see where the price came into the 1.272. You see that? And it extended all the way down to the 1.414. So that's the extension from there to there, and it extended all the way down to the 1.272. Couldn't close underneath, but it actually pushed all the way down to there. Okay, so naturally this also may offer some kind of support. This is still in play, yeah, because you can see it's working. You can see that the 1.272 and the 1.414 reacted. And so if we do go down, obviously you'd see if there's a reaction, or if you see if there's a reaction, or if we go further, you see if there's a reaction. And the strongest areas of interest will be where you have some kind of confluence. Is there any there? Yeah, there you go. There's a little bit of confluence there. See that? So on this extension, you've got the 1.272. It lines up with the 1.618. There's pretty good confluence there in terms of fib extensions at about somewhere between 14.5 to 15 cents. Yeah. So naturally you'll be thinking to yourself, that could be a good place for the price to find some kind of at least temporary support. In price discovery, the only way to find targets are with some kind of fib extension or trend-based fib extension. And so I'll keep that in mind. That's not a bad area to I'm going to put all of that into a little group just in case. Fib extension, I can spell it right. Extension to the downside. What else is there? Let me see. I don't think you should be thinking like that at the moment. It's clearly in a range. It's hard to see, but there is a range. And the reason why there's a range is because you can see that the 50% mark of the range is being respected there. So therefore you have to imagine this whole thing as one big range. That's the halfway point, right? At the moment, that's how it is. And right now we're just ranging in the lower part of the range. So just imagine the bottom part as a range, the top part as a range too, which we haven't really been in for long. And if you do get a breakdown, just imagine it as a deviation from the range. We don't necessarily expect to be out of the range for long. Yeah, and to see strength return, you have to see the price get back into the range. And so if you can imagine the price action like that, it would be, you're not going to be overly bearish. We may get that. We may get a little deviation from the, if we do get a breakdown, get a little deviation and then right back in. That's what you want to see. That will be your first kind of big sign of strength. If you marry that idea with maybe this trend line, yeah, obviously you want to break that trend line as well. So, and this is something else to kind of keep an eye out for. If we are looking to have a breakdown, we could be forming a little bit of a steeper trend line now. No one knows. Like, I'm not saying it's going down. I have no idea, but we get this a lot for breakdowns or breakups. You get like an outer trend line like this, and then you sometimes you get really bearish or bullish price action, and then you get a much steeper trend line that the price follows. You know, it could be any of these really. It's hard to tell exactly where the trend line is. And if the price now does kind of do this and then go down, do that and then go down, then actually you have to break the steeper one first. Yeah, and sometimes the price can do that until it hits some kind of area of support, then it breaks the steep one. It could still make a low here just to fake out everyone, and then you have the final break, the proper break, and then you're starting to get back into the range. So this all becomes a deviation from the range, and then hopefully we'll start to head up, and that's kind of, that would be acceptable. That would be normal behavior. That would be normal price action. That could happen. There's no reason why that could happen. You'd be looking more of a round. If that was to happen, that'd be like a rounding bottom idea. And actually, just looking at the price action now, the other thing that I was thinking about, potentially, I don't know. I mean, who knows really? Like, let's not fool ourselves. No one really knows. It's all speculation. It's all entertainment, right? Entertainment value only. I like to speculate on future price action. I mean, it's always possible that you're forming some kind of, you could form some kind of rounding bottom here. Yeah. Adam and Eve, V-shape, rounding bottom. We can see that on Bitcoin as well. And so this is the other thing that I've been thinking about Bitcoin. So while people might be thinking, I'm thinking a little bit bearish at the moment. And I know Cactus Cake is the Uber Bear. Is it Cactus Cake, or who's the Uber Bear? Is he even here? Cactus, are you here? Shabuddin, morning. Yes, I'll have a look at those two. There are some bears among us. But the other thing that I was thinking about, which isn't bearish, actually, it's quite bullish. If this was to happen, it would feel bearish, but actually it's quite bullish. So this is your V. And while I was saying that going down is going to look bearish, if we start going down and all we do is this, see? And so again, it's a failed V, but actually it's an Adam and Eve pattern. See that? I don't know if that's going to happen or not, but that's the beginning of an Adam and Eve pattern. Yeah, you still have your neckline. There still needs to be a break and a retest. Yeah, but even though I'm saying that this is looking bearish, and if we go down, it's going to look bearish. If we don't make a, I mean, you can actually you can actually take out the low with an Adam and Eve. You don't have to hold a higher low. But you have a rounding bottom here. Okay, you have a rounding bottom, you go right back up, take out the high, break it, back test, and you're off. Okay, so just because we have a V, normally with a V shape you have some kind of downward channel here, where you have a consolidation correction before you have a breakout. Yeah, and the breakout is like that. If right now we don't have that downward channel, we start to find lower prices, you could get into a situation, a bullish reversal, where you have a rounding bottom, and so you have a different kind of bullish reversal pattern. Ideally you want to hold a higher low. Again, anything can happen. The price could always make a lower low here and still do this, and so you have to bear that in mind. Okay, and of course, you know, like anything can happen with the price action. Like, this is what I'm saying. You could end up with a massive inverse head and shoulders. Like, no one really knows what's going to happen. There's so many things that could happen, but I think the minute you lose that trend line, I'd start getting really bearish. So we're not there yet, and to become bullish, I'd want to see that trend line reclaimed. It doesn't have to be immediately, just at some point in time. You lose a line bearish, you reclaim a line bullish. That's how I think. And so that would be my first prerequisite for getting back to bullish after we lose that descending trend line. Looking at the local price action, seeing a little bit of strength now. Yeah, let's have a look at Slerf and see what Slerf is doing. It's interesting because on HTX, Slerf is actually much higher. So the perpetuals are low. I don't know why. Yeah, Slerf still isn't showing strength. It's just doing nothing really. And I mean, this looks strong, but you know, like, it could be some kind of bear flag, you know, so you have to bear that in mind. These kind of consolidation patterns look bullish, but they're bearish if it's just forming some kind of flag for finally to break down, to continue the move, the down move. Okay, so just bear that in mind. Just because it looks strong doesn't mean it's strong. Strength is going to require a market structure change, and in the context of where we are now, I just have to take out that high, put in a higher low, and go back up. That's all that has to happen for us to begin to see strength return to Slerf. And then obviously, if you're seeing strength return to Slerf, I'll be looking to see strength return to Bitcoin as well. All right. That's my update. How does that sound?